So let me start today's video by talking about a very important but fundamentally missed point about Indian stock markets. Now, Indian stock markets are one of the hardest markets to make money in. Why? Because if you take a look at Apple, or if you take a look at Amazon, or if you take a look at Microsoft, then the data is very transparent and it is very easy to parse through that data. Right? So the market efficiency in the US market is very high. Now, I'm not trying to tell you that Indian markets are inefficient or there is something fundamentally wrong with Indian markets. No, it is just that the US markets are much more mature, the data is more reliable and the quality of data is very high. Right? Now, if you compare that to the Indian market, what happens in the Indian market is that Indian markets are mostly family-based businesses. They have been in generation for the last 2 generations, 3 generations. Many of the businesses in India are family-based businesses. Unlike the US businesses, they engage in a lot of weird stuff, right? I'll not name it here what type of stuff, but essentially the management of the companies in India, it can be really shady, right? And as retail investors, we do not have access to this type of management related information. Unless the news is completely out and we have taken a hit on our stock portfolio, we would not know what is happening and what is going on in the management. Now, this is a very important point for us to understand as retail investors and accordingly make our investments. Many of you ask me that, hey Akshat, can you name some multibaggers? Akshat can't do it. No one can do it. Okay, even Mr. Rakesh Jhunjhunwala can't do it. But what they can do is that they can figure out or they can bet their money on good management, that's A, and they can bet their money on potential industry leaders. Now, a combination of these 2 factors is what makes a company multi-bagger. Now, here is a chart for you that shows the returns that have been given by some of the top stocks in India. And you can take a look at Bajaj Finance, Bajaj Finserv. You can take a look at something like Havells, right, which has grown from a very small company to a relatively big company now. You can take a look at Pidilite Industries, again grown from a small company to a very big company now. You can take a look at Kotak Mahindra Bank, which has been able to expand and grow with India's growth. Now, what are 2 very important common features in all these industries? Number 1, the management of all these companies has been great, literally great. For example, Bajaj Finance is known to have one of the best management practices in the industry. That's 1. Even Kotak Bank has shown very strong management related abilities. That is factor 1. Factor 2 is that these businesses are almost like monopolies. For example, Bajaj Finance is a dominant company. It has massive market share when it comes to giving loans to white collar employees. Massive market potential for a company like Bajaj Finance. It is literally a monopoly there. When it comes to something like Asian Paints, excessive market share. If you take a look at Pidilite Industry, which makes Fevicol. Fevicol in itself is a monopoly and I'll be surprised if any of you would not have heard of that company. Now, the lesson for us is that if we identify companies which have very strong management, that's 1. Second, which have the potential to become monopoly either in their own product segments or monopoly as a company altogether. These are the type of companies that eventually become multi-baggers. So on today's video, I'm going to name a few companies that I'm adding from a long-term perspective. I feel that these companies have excellent management and they can become monopolies going forward in their product segment or company as a whole. So let's get this video started. I'm going to create my own small case and from time to time, I'll keep adding and deleting companies as per how the businesses evolve. This is not an investment advice. This is a research that I myself am doing and this research is evolving, right? Because sitting now, we can say that, you know what, Pidilite has the best management practice, but something weird might come up after 2 years. So we have to rationalize that. So please keep a track of the small case and keep a close look at these stocks. These are super long-term stocks. So I'm giving a window of 5 to 10 years. These are not short-term. So please don't comment that, hey, Akshat, you're buying this stock at such a high price. I don't care, right? I mean, after 10 years, if this company will become 3x, even if I'm buying the stock at a high price, it's completely okay. Because if this business becomes monopoly, guess what? My money will at least become 5 times from there. So let's get this video started. Now, the first key stock that I'm buying for super long term is called as Relaxo, right? So Relaxo, now why am I buying Relaxo? Now I can show you like a lot of data around Relaxo and, you know, try to convince you around fundamentals, but I'll convince you about someone called as Ramesh Kumar Dua, right? So he is the main promoter of the company. His entire family is involved in Relaxo's business. So very quickly, let us look at the promoter holding for Relaxo and you can see that, you know, promoter holding has hardly changed. And if you take a look at Mr. Ramesh Kumar Dua, he has maintained its holding. Mr. Mukund Lal Dua, probably his brother, Lalita Dua, Usha Dua, a lot of his family members hold massive stocks in this company. They are betting on this business as a family, right? That's point one. Now, this is not the reason why, you should go and bet big on a company because the entire family is running it, but you should bet on a person who is running it, right? So this is a very interesting article that I was able to dig up on Mr. Ramesh Kumar Dua, and this paragraph literally impressed me a lot, right? For example, he joined the company, a very small enterprise, back in 1976 at the behest of his father while preparing for MBBS. He was 17 when he started helping his older brother run the manufacturing business of Hawaii Chappal. I'm sure that many of you would have heard of Hawaii Chappal. From blue and white slippers in 1976 to 10 casual and semi-formal footwear brands, Relaxo has emerged as one of the largest manufacturer of footwear in the country, with a production capacity of 600,000 pairs a day across its 8 factories. Now, 2-3 very important points for you to understand, right? Number one, he is a person who has been running this business for decades. That's one. Second is that he is someone who has seen things on ground. He has built multiple brands within the footwear industry. He knows how to build and scale up brands. He has done it multiple times. Third, and very important number-wise data that you can take a look at. Relaxo has 8 factories, okay, which means that this is a very small company, so to speak, just purely based on number. You don't need to do any data analysis on this. Number 8 literally indicates that there is scope for them to undertake fixed capacity expansion, and whenever the demand picks up, they are going to expand massively and add more money to their profit margin. And let's take a look at how the company has been performing for the last decade. Now, there has been a consistent rise in the profits. There has been consistent rise in sales, almost consistent rise if you discount this Corona period, right? The operating profit have been great, and this is what excites me the most, that the profit margin is improving. It means what? It means that their return on capital will be improving. As companies make more ROCE, it means that they will have more cash flows coming in to undertake more business expansion and make their ROCE even more prominent. So this is the type of a business that I get really excited about. There is no unnecessary tech leverage. There is a great guy running the business. Entire family is behind him. They have shown consistent history of growth. There is absolutely no reason, at least now, for us to believe that these sales number, right, which are standing at 2,300 crores, will not become like 5,000 crores in another 3 or 4 years. Right? There is absolutely no reason why that should not be happening. It can easily do it. Now, more to the point about the fixed asset expansion. Now, if you take a look at on how the fixed assets of this company has been going up, you can clearly see that, the fixed asset expansion has become almost 4 times in the last 10 years, which is a good sign. It means that the company is able to generate free cash flows and reinvesting that money in their business, which is a good sign, because this shows that these promoters are in it in their business for the long term. They are not just here to trick people and just sell them stuff and go away. No, they are here to stay for decades and generations to come. Mr. Ramesh Kumar Dua is probably not just building this company just for him. He is building this company for generations to come. So this is a super stable business. I see absolutely no problem in it, and I am willing to put a lot of money behind it. Now, there is another very interesting thing that I will show you, and this is something that we can see from the chart, that there is a pattern of consolidation and then growth, right? So, for example, you will see that the stock consolidated in this time period, right? Then it consolidated in this time period. Now it's consolidating again. So every time the stock has consolidated, it has taken an upturn, right? And it has been doing it, right? Because it's such a stable business. And we are like pretty much in this consolidation cycle for the last several months. So whenever it moves up, it will be a good time. And this is the reason why I am making an investment in this stock. Now the second stock that I am bullish about is called as Alkylamines. It is a specialty chemical stock in India. So first and foremost, this is a report by Invest India, which is a very credible government agency. And this is what it says, that the specialty chemicals constitute 18% of the total chemicals and petrochemical market in India. As of 2019, the market size is 32 billion. The demand is expected to grow at 12% CAGR, right? So this is a very important point, that market is going to grow at a 12% CAGR. Right now, the specialty chemicals contribution is only 18% to the total petrochemical industry. So this also is likely to improve. So overall, the industry trend looked to be good from this single data point. Now, why am I very keen on buying Alkylamines chemicals? The reason is very simple, that look at the ROCE, right? ROCE is 55.8, right? This is one of the highest ROCEs that you will see on any company. And this is massive, right? It simply shows that the profit margin will be very high. This we can check by going into the quarterly results. Now you can see that the profit margin has been high and it's growing. Now these type of companies have the potential to become multi-baggers for the simple sense that their ROC is so high that they are getting free cash flows. They have money to plow it back into their business and grow it further. That is how companies become monopolies, and that is how stocks become multi-baggers. Now let's look at promoter holdings also. So promoters have not sold their holdings at all, right, for years. So which is a great sign. It shows that the company promoters believe in what they are doing, and honestly they don't need to sell their stake for the simple reason. Why? Because they're already getting enough free cash flows to finance their operations. So they don't need to do any pledging, they don't need to do any of that stuff because the profit margins are so high. Now, I don't have enough information about the lead promoter, Mr. Yogesh Kothari. I tried finding information on him. He seems like a very reclusive person, so not much information about him. This is one missing piece that is making me a little bit uncomfortable. I would have loved to learn more about his business philosophy, how he thinks. I'm keeping a track of this. I will hopefully be able to uncover more information in days to come, and then I'll make a final call and make a lump sum investment in this company. But what I simply want to point out is that it is a massive monopolistic type of a business in a growing industry. 10 years from now, if it continues with the progress at a rate at which it is currently growing, then you are betting on a winning horse. Now, the third stock that I'm quite bullish about is HDFC Bank. Now, this might look super counterintuitive because HDFC Bank was started somewhere in mid-90s, so it's a fairly older bank. But here are a couple of key changes that are happening in the banking industry. I've done a complete analysis. You can check my overview of the banking industry here. But what I simply wanted to tell you about the banking industry is that banking industry, in my opinion, and this is where I'm taking a bet, that especially when it comes to banks like HDFC, Kotak Mahindra, ICICI, the top 3 or 4 banks will become highly monopolized, so to say, right? It will exist as 2-3 top players. Why? Because even now you would have observed that there are many new banks that are coming up. RBI is giving more licenses. What does this indicate? It simply indicates that there is a lot of pent-up demand for banking products in India, and there are a lot of customers that are underserved. Now, banks like HDFC, ICICI Bank, Kotak Bank, what are they doing? Number one, they are expanding at a pan-India level. They don't care whether they are going to villages. They don't care whether they are going to cities, tier 3 towns. They are literally going everywhere. That's one. Second, banking is a trust-based business. Especially when you move to tier 2, tier 3 cities, villages, people would want to put money in banks that are older. That is the reason why, despite PSU banks being so inefficient and literally burning down their capital, they still survive. Still, people line up outside which bank? SBI Bank. Yet another poor joke on SBI. They line outside SBI Bank to open their bank accounts and undertake transactions. Third and finally, what is happening in the banking industry is truly phenomenal. What is happening here is that, see, you open your bank account, that is done, right? That is what used to happen, that open our bank account, our salary comes into the bank account and we are done. But now what is happening is that there are a lot of neobanks that are coming up. These neobanks or new age banks allow you to manage your money properly. For example, if you are getting 20,000, then you will automate a system that, hey, send 10,000 to mutual fund, send 2,500 for this, pay 2,500 on this. So you can automate your finance. So that type of functionality is now being offered by neobanks, for which they are partnering up with traditional banks like HDFC. So your frequency of interaction with your bank will also go up. So why does something like HDFC or ICICI has a very clear growth plan? Why? Because number one, they are expanding all across India. Okay, fine. After a while, they will not be able to expand at a massive rate, but you will engage with your bank more and more for every single thing, right from insurance to managing your money and incorporating different functionalities on it. Therefore, these banks will continue to be massively profitable for decades to come. So here is my investment in HDFC Bank. I'll keep on adding more money to it because I believe in this growth story. In passing, the final point about HDFC Bank is that their management has always been really good. Yes, Mr. Aditya Puri held the realms of HDFC and grew it to a certain point. Even their current management is very capable and they will be able to grow this bank. Now, another couple of notable mentions before I close out this video are the following. Number one, I am betting on Nykaa. I believe that it's a good firm with good management. I have done a separate case study on Nykaa. The way that they have handled the coronavirus 2020 pandemic. Falguni Nair, who is the CEO of Nykaa, she is very capable in terms of pivoting her businesses. She literally pivoted the business of Nykaa during the pandemic and opened new revenue streams for the company. Their family is again involved in terms of running the entire business. They are launching their IPO soon. So I might not bet on the IPO, but that is a company that I'm keeping a close track of because I believe that in the next 10 years, it can actually become really big. Final mention is DMart. We all know that Mr. Rakesh Jhunjhunwala is a fabulous investor. He has grown DMart. Now the headache with DMart is that the price never comes down. I've been waiting for the price to come down, but it does not come down where I can make massive bets on DMart. So I'm finally giving up and I'm going to make an investment on DMart because I'm not betting on DMart. I'm rather betting on Mr. Rakesh Jhunjhunwala. He understands. He's a person who is attached to the ground. He understands how businesses are built and run. He's an ace investor and I have full faith in his capabilities, and I feel that he will be able to navigate this complexity of retail space that the entire industry is growing. So these are a few key points that you need to make, and this is how you need to analyze companies before you start betting big on them. I am making these investments for literally a decade, so I am in no hurry in terms of buying it at an absolute low price, below 200-day moving average, something like that. I am going to bet big on these companies. You could consider investing in this small case. I will continue to rework this as and when I get new information. So I hope you enjoyed the video. Give it a thumbs up and I will see you the next time.